Hello students, today we are going to complete our third question of A2 accounts, paper 32. There were three questions. We have done two up till now in our previous videos, and today we are going to finish inshallah this paper by attempting the third question. So here is your paper. Okay, so this is the insert, June 2023, paper 32. We have done question number one, uh, company accounts, non-profit organization. Question number two, that was cash flow. Oh, now question number three. Okay, first we'll go to insert. So here is insert. Question number one, we have done. Question number two, now question number three. Alice and Bob had been in partnership for many years, engaging in trading of wood. They shared profit and losses in the ratio of 3:2. The total contributed capital was 250,000. Each partner contributed capital on the basis of profit sharing ratio. It means 3:2 means if we divide 250,000 multiply by 3 upon 5, it means the share of capital of Alice is 150,000 and for Alice. Okay. And for Bob, it's 250,000 multiplied by 2 upon 5. That is equal to 100,000 for Bob. Getting my point clear? Okay. Now, X Limited took over all the assets except cash at bank and a vehicle. The assets were taken over and revalued as, okay, these are the carrying values for business, and this is the revalued amount for which X Limited has taken the assets. Okay. The value of premise is increased, equipment value is decreased, this vehicle's value is also decreased, inventory value is increased, and trade receivable is also decreased. Okay. Now, Alice took over. Second vehicle carrying value 25,000. There were two vehicles. One was given to X Limited, and another was taken up by the one of the partner Alice for 20. The carrying value of that vehicle was 25,000, but he has taken at book at a value of 23,800. Okay, the book value is 25,000, but he has the revalued vehicle cost would be $23,800. Okay, trade payables, 44,000 were settled taking a cash discount of 5% and were paid off the partnership bank account. Okay. Now, cash at bank amounted to 27,000 before this deal took place with X Limited. The partners had 27,000 cash at bank. Purchase consideration 200,000 ordinary shares of $1 each at a value of 1.6. The market value of the shares 1.6 and the balance is cash. Okay. So total 420,000 they were X Limited was supposed to pay for the business, and this is the amount. Okay, and 420,000, and they are paying 160,000 ordinary shares by two. It means the number of shares they are giving 200,000 multiplied by 1.6. Okay, so the value of shares for the partners is 200,000 multiplied by 1.6 is 320,000. The total consideration 420,000. It means uh, they are giving us cash. How much? 100,000. Okay. Now, ordinary shares were issued to Alice and Bob equally. Whatever the shares they were given. Acha. Alice and Bob had a credit balance of their current account on 31st December 2022. Credit balance means they have not taken money in anticipation of profit, less equal to the amount of profit, but less than the amount of profit they were given during at the end of the year, December 31st, 2022. That's why their current account is showing a credit balance. The balance on Alice account was twice of that of Bob's. Okay, their current accounts were transferred to their respective capital account on 1st January 2023. Okay. What we are required to do first, state two reasons why business may acquire another assets. The very this word has synergy, combining the powers of business to earn more. Okay, and sometimes entering into new markets. Okay. Now prepare realization account. Acha, when we are preparing realization account, I must tell you one thing. We can make it as make this account. This is only 4 marks account. We can make it simple also, but for students who want to understand realization account, I must say I will give you a detail of realization account. Okay, okay. Now see, this is realization account. Okay, okay. This is realization account. Uh, okay. Now what we have to do, we have to make a T account for realization, and I'm making the T account for you. This T account, realization. Okay, okay. This is our account, realization account. It is only a 4 marks, and you can make you don't need to give more details. But if you for the sake of my students, I am giving some details. I'm making a realization account in more detail, so you can understand what is happening actually in realization account. Okay, see what we have to do. Uh, all our assets are going out of business. Okay, all our assets are going out. So what we'll do? All assets are going to be all assets are going to be credited because they are going out. So when all assets are going to be credited means our realization account is going to be debited here with premises, okay, with their original value, okay, with their carrying value. Okay, premises, the carrying value of premises is how much? Here it is the value 124,000. Okay, premises, okay, $124,000. Okay, second was equipment 38,000. Okay, equipment 38,000. Okay. Third one, there were 2 vehicles, 23,000, and the one was taken by the Alice at 25,000. 25 plus 23 is 48,000 vehicles. 48,000 vehicles. Okay. Then we have inventory 32,000. It's also going. Inventory 32,000. Okay. So all these assets are going out. We have to credit all these assets account, and we have to debit realization account. Then trade receivable 73,000. Trade receivables 73,000. Done? Okay. Okay. Now, accounts payable is going out. So when liability is decreasing, it is going to be debited, and realization account is going to be credited with trade payables. Trade payables. How much? 44,000. Done? Okay. Now, when we pay this liabilities, this liability, Acha, one uh, one of the vehicle is taken up by the one of the partner Alice. So what we have to do? We have to credit Alice capital, and that was taken up at how much? So 23,800. 23,800. 23,800. Okay. Then when we are paying trade payables, we are availing discount. So when we are paying trade payables, we have to debit realization and we have to credit bank, but we don't need to pay 44,000. We have to pay 44,000 multiplied by 95%. That is 41,800 we have to pay. 41,800 we have to pay. Okay. Now, uh, we received shares from X Limited, 320,000. Okay. And we received cash, 100,000. Okay. Getting my point clear? Okay. See, now this is not part of answer, but just for your, if we take totals over here, okay, this is called footing. Oh, the line has become very big now. I have to make it small. Okay, okay. Now take footing. If we get the totals over here, it would be 44,000 plus 23,800 plus 320,000 plus 100,000. That makes total over here and here. Okay. That makes sense. This is not, this is only footing. I'm not balancing the account. 487,800. And here it is 4,000 plus 38, 124,000 plus 38,000 plus 48,000 plus 32,000 plus 73,000 plus 41,800, 356,800 here. 356,800 here. Okay. Now, if we take the balance here, balance, balance, this realization account has balance of how much? 487,800 debit minus 356,800 credit. Balance is 131,000. Here it is. 131,000 is the balance. That balance on the debit side means realization is showing profit. That profit is going to be divided between the partners in the ratio of 3:2. So again here what we'll do, we'll write Alice capital. That profit will go to Alice. Alice capital is 131,000 multiplied by 3 divided by 5. That would 78,600. Out of this 131, 78,600 will go to, out of this 131,000 profit. Alice will take 78,000 and Bob will take eh, Bob capital. It would be how much? 131,000 multiplied by 2 divided by 5. That means 131,000 multiplied by 2 divided by 5. That means 52,400. Getting my point clear? So this is now balance. If we take balance here again, what we'll get on both sides? This is really an easy question. 487,000. 487,800. And the realization account is closed now. 487,800. Only what we need to do, we have to, okay, if we remove these things, okay, okay, okay. This is the realization account. Okay, okay. Oh, we have to make T accounts for Alice and Bob, and it is given like this. Oh, how would I make these accounts? Alice and Bob. Oh my God. I can't rotate it. Okay, let me check if I can rotate this. Oh, I can't. Okay. Okay, I can't rotate this T account. So what I have done, we'll make T account here for, uh, sorry, we'll make T account on Word file here. Okay, because I can't rotate that question paper in my app. So we have to make T account like this. Okay. Now this is okay. Uh, this is partners current account. Okay. Now balance BD uh, LS capital account was $150,000 and 100,000 for Bob. We calculated that earlier. Okay. Now realization account uh, that was how much? 78,600. Profit was given from the realization to Alice. 78,600 and 52,400 was given to Bob. 52,400. Okay. Then, oh, current account. Current account was transferred to, but we don't know what is the amount of current account. So what we have to do, we have to go back to our question, the PDF, and we have to see how to calculate the current account. Oh no. Okay. We have to make current account for that. For what we do for computing current account, we'll add all the assets. We'll add all the assets, we'll minus liabilities, then we'll deduct capital, and then we get the current account, amount of current account. See, here the carrying value of assets. Okay, see, total assets, 2,90,000. I don't know where is my calculator. Huh? Here's my calculator. 290,000 was the 290,000 was the amount of carrying value of all the assets plus 25,000. We the value of other vehicle, this one. So 290,000 total assets plus 25,000 this total assets and 27,000 cash at hand plus 27,000. So total assets $342,000 we have. 300 and $342,000 total assets. Okay. Minus liabilities. Okay. Okay. What is the amount of liabilities? Trade payables. Trade payables. Okay. Okay. Trade payables 44,000. Trade payables 44,000. Okay. It means the amount of capital is how much now? Assets minus liabilities is equal to capital. Okay. So capital amount is how much? Capital amount is how much? 342,000 minus 44,000. 298,000. The current 298,000. This is the capitals. Okay. So, but this is the amount of capitals. But what is the real capital at start of business was how much? $250,000. So if we deduct them, 298 minus 250,000, we will get 48,000 difference of in capital at start and capitals at end. So this is how much? 48,000. So, acha, there is a statement. Alice account, current account were twice of that of Bob. So if we divide 48,000 between Alice, so 48,000 multiplied by 2 upon 3. That would make it how much? 48,000 multiplied by 2 divided by 3. 32,000 is the current account balance of Alice. So it means Bob has 48,000 multiplied by 1 upon 3. That means so 16,000. Got it? So this current account is also added to 48,000 and 16,000. Oh, sorry, 32,000. 48 was total actually. 32,000 and here it is 16,000. So if we get totals here of this account, the total is 260,000 and here it is 168,400 totals. Okay. So now shares X Limited, which is divided equally. So that means the shares of what was the purchase consideration? If you remember, purchase consideration was how much? Here was purchase consideration. 320,000 shares of shares value which they are given at market value was 320,000, which was divided equally between the partners. So what we have to do, 320,000 divided by 2, 320,000 divided by 2, it means 320,000 divided by 2, it means 160,000 each. They were given shares with the value of 160,000 each. 160,000. Done. Alice has taken up the car. So, vehicle, 23,800. Okay. Now see, if we deduct 260,000 total credit side of Alice account minus 160,000 minus 23,800, it means the balance should be paid 76,200. 76,200 here. It should be paid in the form of cash. And for Bob, 168,400 minus 160,000, it means he should be given cash from bank 804,000. 804,000 plus 76,200, it means we should have 76,200 plus 8,400. Okay. $76,000. 30,000. Uh-oh. 76,200 plus 8,400, 84,600. Okay. C. Oh, okay. Now we should have this amount available in bank. Okay. 76,800 and 8,400. Acha. So we get the total here 200. Let's see. 60,600 and this is 168,400. Okay. This amount. Okay. Okay. This is the total. Now, do we have this amount available in our bank account? Getting my point clear? Is this available? So what we do? Okay. Okay. What we will make, just to reconcile, we will make a T account again for cash. It's a rough T account for cash. See, cash in bank. Okay. Now, opening balance. Oh, this is debit side of T account. This is credit side of the T account. Okay. Now, see, opening balance of cash BD was 27,000. 100,000 we received from X Limited. Sorry, X Limited. We received 100,000 as purchase consideration. Okay. And we paid trade payables 41,800. Trade payables. So the balance CD available with us for bank is how much? 127,000 debit minus 41,800 credit, that make 85,200 is available. So if we add these two figures, 76,000 cash given to partner, 76,800 plus 8,400, yes, 85,200 cash is available with us. This is the checkpoint. Please check at the end. Okay, do we have that much cash at bank available which we can pay to the partners according to the requirement? Got it? Okay. Now move to the question again. Okay. Last question. Now, we have to make journal entries in the books of X Limited to record the acquisition partnership. Now, here what we have to do when we are making journal, okay, date, particulars, particulars, okay, debit and credit. This is how we make journal. What we have to do on January 1st, Jan 1, we have acquired. So we will debit here in the books of Excel the new values. Are you getting my point? All the new values means these values. These values we'll take all these values. So we'll take premises 186,000 debit, premises debit 186,000. Okay. Then we debit equipment 32,000. Okay. Equipment 32,000. Okay. Then we'll debit vehicle 18,000. Vehicle 18,000. Okay. Then we'll debit inventory 45,000. Okay. Inventory 45,000 and trade receivable 71,000. 45,000 and trade receivable 71,000. Okay. Now we are giving them shares, share capital, 200,000 ordinary shares of $1 each. It means 200,000 is the value, 200,000 is the value of shares. Okay. Now, but we have taken a premium. Share premium is how much? 120,000. 200,000 multiplied by 0.6. So this is 120,000. And we have given them cash from bank, which is 100,000. Now see class, if you see the difference between these, this is 200,000 shares plus 200,000 plus 100,000 share premium plus 100,000 cash at bank. So we have paid 420,000. That was also written in the question because they have this one. They have paid $420,000. But if we deduct all debits, there is a difference of 68,000 here. How much? The debit and credit are not balanced. In general, we should be careful. The debit and credit should be equal. Why 68,000? There is a difference of 68,000 in the debits and credit because of the goodwill. Because this business is, we have paid more than the value of business to those two partners. We have paid more 68,000, which is goodwill for X Limited now. Getting my point clear? This is a general entry to record. Getting my point clear, all my beloved students? This is how do we calculate. Okay. We have add all the percentage consideration on the credit side. We have deducted all the debit asset on the debit side, and we'll get the amount of goodwill. This is how we have to do. What next? Oh, this is the end of paper. So that's all for today. Inshallah, next week we'll come up with the paper 42. Inshallah, the costing from because from this year they have uh, you know um, changed the policy. They make two papers: financial accounting, cost accounting. Inshallah, we have finished papers in three sittings. Three videos we have made for paper 32. Inshallah, we'll come up with paper 42 from next week. Inshallah, take care. Allah Hafiz.